Hey man, I'm Jusko from ProudMoney.com. In this video, we are going to address the question of income on a credit card application. What should you be putting for that annual income? And is the credit card company going to somehow verify that income to see if you are telling the truth or if you are lying? So we're going to cover all that. We've done this before, but it has been a long time, and I've seen this come up on a couple discussion board threads recently. Now, oftentimes when people are asking about this, they're sort of coming from two different directions. The first direction is someone who is a little unsure because maybe they don't get their income just from a traditional job. Maybe they're a student who are getting money from their parents, those sorts of things, and they're not sure what constitutes income in terms of what to put on an application. And then the second way, the second direction people come from is, I want to get a credit card that I'm not sure I'm going to qualify for, or I want to get a bigger credit limit on that credit card. So I think I'm just going to lie and say I make more money than I do. And as long as they don't verify it, will I get away with it? In most cases, credit card companies are not going to verify the income number that you put on a credit card application. In some cases, if you are getting a card and then you ask for a credit line increase immediately after that, they might then want to see some income verification before they make that decision. Or if you are going after a business credit card and you don't really have a business track record, they might ask for some income verification. But by and large, they are going to assume that you are telling the truth. Now, if that sounds like I'm giving you the green light to lie on a credit card application, you must have misheard me. Lying on a credit card application is illegal. Misrepresenting yourself on an application is fraud, and you could go to jail for it and or pay a hefty fine for it, even up to $1 million. Now, the chances are you are not going to have to pay $1 million, and the chances are that you're not going to go to jail, but that doesn't mean that you couldn't be punished in some way, perhaps with a smaller fine, and then of course you could be punished not only by the credit card company that you took out the fraudulent application with, who of course is not going to deal with you in the future, but it's also something that could hurt your credit score in other ways and make it harder for you to get a loan in the future. Now, for every person that is thinking about lying in order to get approved for a credit card or to get a higher credit limit, there are probably 2 or 3 other people who are more worried about doing something illegal and saying something on their credit card application that is going to hurt them, even though they have the best of intentions. So they think about what their income is and they're like, well, I'm not sure what constitutes income. I don't know for sure what I'm going to make over the next year, all of those kinds of things. So there are a few cases to look at that commonly come up where people question what they should put for income. Number one, if your income is about to change. So you might look at what you made in the last 12 months and say, well, I'm going to make like twice or 3 times as much as that in the next 12 months because I just got a new job. Which should I use? Well, you could use your new income as the income that you put on your credit card application because you're doing it honestly. It is money that you expect to be what you are going to make in that situation. So it doesn't matter if you made a different amount in the past. The credit card companies are going to see that as an honest assessment of your income. And then maybe even more common is the situation where someone is either a stay-at-home spouse or a student who makes little to no money but gets money from their parents or some other way that is not part of a regular job. In terms of being a stay-at-home spouse, in almost all of the credit card applications, if you look at sort of the little information symbol that they put next to income, they almost always talk about the fact that you can include shared income from someone else if that is income that you have access to. So essentially, even if you are making 0 as the spouse, but there is X amount coming in to the household from someone else, that is shared money, and you can put that on your application. When you are a student, it is a little murkier, especially if you are under 21. On some of the credit card applications, you are going to see language that says if you have money that is being put into an account for you on a regular basis that is for your use, well, then they would say you can consider that as income. So if you have parents giving you X amount of dollars every month while you go to school, well, then you could count that as income. You couldn't count your student loans as income because those are going to go straight to the university to pay for your tuition, but if you have money coming from somewhere else, that could be counted. Now, some of the credit card companies do put that on their application. Some of them don't mention it at all. So Capital One, Discover, Chase, they all sound like they're telling students, yes, if you have regular money being put into your account, that would be okay. But most of the other credit card companies do not have that same exact language. So what students can reasonably say is their income might be different depending on the credit card company. But the bottom line in any of those cases is, if you are honest about what you think constitutes income, even if they come back and ask for verification, you say, well, here are all the reasons I put that. Even if they say, no, that's not, justified, that's not considered income as far as we're concerned, you're not going to get in any trouble for it. You're just probably not going to get the credit card, or maybe you're going to get less of a credit limit than you would have otherwise. But as long as you're honest about it, there's not going to be an issue. But you don't want to lie, because even beyond the fact that it is illegal, which should be enough of a deterrent right there, is the fact that the credit card companies do have some ways to sort of look at the signs to see if you probably are telling the truth or not. One of those might be they could look at your credit history and see what are the credit limits this person has gotten in the past. If all the credit limits are very low, but this person is coming in saying they make $150,000, well, then they might think, well, how come all the credit limits were so low in the past? Maybe they're lying about their income, because if they're telling the truth about their income, maybe we'd give them a higher credit line, but we want to know that that income is real before we do so. And then that would be a point where they probably would want to verify that income and see some proof. And then of course, if you do get the credit card that you wanted and you lied on that application, if anything goes wrong, you start making your payments late, whatever, that's when you could trigger an income verification, where then you're not even at the application stage anymore. Now you're an actual customer. So now they're looking for proof of your income and you have no way of providing it. Maybe on the application, if they ask for proof, you could just walk away from it and say, oh, I got caught. But once you're an actual customer, they're going to want that proof, and it's going to be a little harder. And so now you're putting yourself in a place where you could get blacklisted by that issuer, where they would not give you credit cards in the future. They'll shut down the credit card that you have, and none of this is going to look good on your credit report. And then of course, regardless of anything that I've just talked about, and no one likes to hear this part, but there is the possibility that the credit card company knows best in terms of what credit limit you should have based on your real income and based on the real things that are on your credit report. How long you've had credit, how you've done with the credit that you have, how much credit they should extend you based on your real information. So if you are inflating that number and you're getting a higher credit limit because of it, you may think you can handle it, but you may find out down the road that maybe the credit card company knew better than you did about what you could handle. Now, I know some people in the comments are going to say that I'm just being a shill for the credit card companies, but I'm just thinking about you and your future happiness when it comes to car loans, mortgage loans, all that kind of stuff. Questions, comments, put them in that comment section below. Otherwise, I thank you for watching, and as always, please go to proudmoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not going to go to the website or you're not going to leave a comment, the next video to watch is right there.